Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's the derivatives portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on again, Jim.
Drew, last time we spoke roughly a month ago, you thought the political events were key for market direction. Are politics still driving the markets?
Yeah, I really do think that is the case. And as we talked last time, a lot of that was centered around Donald Trump being a disruptor. He was going to change the way or change the status quo from where it has been. And that's really been emphasized on the trade front with his latest attacks, both against EU, against Canada, Mexico, and the NAFTA renegotiations, and then very lately here again with China, where a $200 billion sort of tariff package that was supposed to get a 10% tariff, he's decided that they may up that to a 25% tariff to, push the Chinese in the ribs or, corner them in a little bit more to say, come to the negotiating table and we can work on something new. So I think, that political disruption is still very key. And from a month ago, I would also add in that, summer volume trading has also been a very critical part of what's been going on. A lot of our markets have really chopped sideways. I mean, the euro has been in a 2.5 cent range. The dollar index very tight. Canada, I think, has been within a 2 cent range for the last month or 2 months even now, I believe. So it really has been maybe a little bit more choppy on some of the political focus or again that sort of disruption focus. But at the same time, also mixing in some of the lighter time summer trading volumes that give us a little less market action, not across all markets, but across a few of the main ones. And we do have, equity indices for the most part sort of just continuing to work higher, ignoring maybe some of the political aspects, drifting higher on the back of what's been a pretty good earnings season throughout the U.S. So you do have some markets trending a little bit, but also a little bit of consolidation in some of the key markets that I follow.
Is that to mean that the central bank decisions aren't as important as they were before?
Yeah, I mean, we really used to live in a, what I called a central bank superstar sort of a time period. We hung on every single word that each central banker put out, and their policies were just so huge that they had such an unending market impact, and that's going back to all the quantitative easing policies that we had here in the U.S., the low interest rates that we had in the U.S., the negative or the NERP interest rates that we had throughout Europe and still have in Europe and still have in Japan, and the amount of quantitative easing that those programs have entailed, where they sort of in Europe took it one step further with corporate bond purchases, and then in Japan, a step further than that, even with ETF and equity purchases. So, they were the market players to watch because of the size of what they were doing, and now they still are very critical, but seemingly on a little lower level than they were before, as we get more about the political leaders in the news, whether that's Trump or President Xi in China or Putin or even the new president that's been elected down in Mexico, where they're negotiating, again, a very meaningful sums of money with different tariffs or trade protections. So the central banker policy is still important, but it seems to be running in the background, and it's almost second nature when it comes to the immediate ups and downs or the day-to-day or hour-to-hour of the market. I think still very important when it comes to the longer-term trends of what's going on with interest rate differentials and so on and so forth. But I mean, we did just have a Fed meeting today, and again, this was their sort of every second meeting that's not as important, so it wasn't expected to have any big news, and didn't. It was almost a reprint of their last meeting, so not all that important as far as market moving data in it. And it will be more interesting come next year when Powell is going to move to have a press conference and make every meeting more live than it is now. But I think today's Fed meeting just really illustrated that they're trying to really be transparent and sort of project forward what they're going to do, so that the market can, work to price it in a gradual and calm manner. So if that's the case, we seem to be getting more of the surprises out of the political spectrum, where we're getting, hit with a headline that we didn't know was coming, or, earlier this week we thought there was going to be some diffusion between the Chinese and U.S. trade spat, where they were going to meet and talk and possibly work things out, and that had the equity markets happy. However, as we shifted into today and last night, the rumors of this increased tariff came up, and then the Chinese response to say that they wouldn't be pushed around or bullied into any sort of trade act. So again, a retaliatory measure would be expected out of China if Trump formally announces this increased tariff. So those are more the surprise, and the surprise moves can often be the bigger ones. And again, given the large sums of these sort of political influences, they can have a very lasting effect in the market as well.
Well, Trump seems to look at things in the short term. The Chinese traditionally have looked at things in a very long term. Could you see this leading to some kind of very brutal conflict?
I mean, they definitely have different time periods even that they have to work in. I mean, President Xi has recently passed laws that can very likely make him a leader for the rest of his life in China in some way, shape, or form, where Trump has got 4 years, and, if everything goes as best as they could for him, he would have another 4. So your timeline already is going to be different between the two leaders. But, China consistently does these 5-year, 10-year plans that they meet and publish and want to work towards. I mean, we have the same sort of thing, I think, here in North America. It just sort of happens at a different pace, and we seem to struggle sometimes. And again, with midterm elections in the U.S. coming up, President Trump could have a very difficult time if he loses control of Congress. Right now, he's got both the Senate and the House. So if he loses complete control of Congress, he'll have even a harder time getting anything done, because the Democrats will be able to slow him down or stop him on a lot of fronts. So there could be some issues coming up with that, and I think again, just more volatility coming from the political side of things, both as we go into the midterm elections and as Trump sort of continues to take this disruptive path to, say, the status quo that was established in trade right now is his big thing, and then may not be the last place he goes to, but definitely the core focus of what he's doing right now.
We'll have more with Drew Zimmerman right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZB. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, the Bank of Canada raised rates in mid-July. Do you see more rate hikes coming in Canada?
Yeah, the market has definitely moved from the mid-July rate hike into pricing in more of an odds of a rate hike in October. Earlier in the year, I was thinking Canada would likely get one done in the late summer to early fall period. So that came a little sooner than I thought it might have. And then I'd been of the frame of mind that Canada really should halt or really wait until maybe the very end of this year and or next spring. But the market's already moved to price in about a 70% chance of a rate hike in October. And that's been on the back of some increased or better economic numbers that have come in, especially over the last month. The GDP number we just got at the end of last week, stronger as well, helping the Canadian dollar do better. So I think it will be very interesting to see how POLAS takes the trade worries going forward. I mean, we still don't have a NAFTA negotiation anywhere close to being done from what I've been able to see. We've got high-level Mexican officials and U.S. officials meeting at the end of this week, and Canada hasn't even been invited to those meetings, which I think is a troublesome development for Canada going forward. But at the same time, POLAS has said, I won't focus on what isn't done and what is a headline. And he has sort of reiterated that a few times, but I think that will sort of start leaking into the data. Again, just the added uncertainty that the business community in Canada faces. And if the U.S. is going to continue to raise rates, we've got the interest rate differential at the 2-year level at about 60 basis points right now. So near the lows it's been at over the last several years. Not the lowest levels, but still reason for funds to come out of the Canadian dollar and go into the U.S. And then, of course, there's going to be the added worry of real estate if prices continue, if interest rates continue to go higher, what happens to our real estate market as that's become such a big component of our overall GDP number when you take in all the subsects of that market.
Do you fear for the Canadian real estate market if interest rates continue to rise?
I fear for it more if there's a confluence of rising interest rates without the other sort of business manufacturing sectors getting things squared away. So if POLAS decides to ignore the fact that we still haven't settled any trade agreements or got a renegotiation of NAFTA in place and continues to raise rates, that would be a confluence I'd be worried about, because then you don't have more of a solid structure in other industries before you really start to maybe chip away at what has been an incredibly strong industry here in Canada, all through construction and everything that goes with the real estate market, the jobs that entails. I mean, living here in Vancouver, you see the spin-off of that industry everywhere. So if you start to chip away at that without sort of giving a firm footing to some of the other bigger industries in Canada, I think we really could be in a much rougher situation, say, mid next year, than we would be if we just took a little bit more of a cautious or slower approach to raising rates. When Poloz first came into office, he made it very clear that Canada was not tied to the United States in a rate hiking sort of pattern. And it'd be nice for me, I think, to hear him reiterate that. It's been some years since he said it. But again, some of that independence that Canada has. And I think the benefit there for Canada is the currency, and that's the shock absorber in that competitive measure. So if we slow down our rate hikes more than the United States, interest rate differentials should drive a stronger U.S. dollar. And then while we're trying to settle these trade disputes, a weaker Canadian dollar gives us a little bit more of a competitive edge to help those industries, again, before some of those trade disputes are fully settled or until they get settled. And then, again, going the other way, you'd have a stronger Canadian dollar, sort of working back some of that advantage that we'd gotten during this sort of rough patch that Canada's in.
We'll have more with Drew Zimmerman right after this.
FANG Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. FANG's management has extensive potash exploration and development experience in Thailand. FANG will have marketing advantage compared to Western producers. Drill program commences this spring. FANG trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, fangventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, with so much political interference in the markets, it seems, are you surprised that gold hasn't done better?
I've been mixed on gold. I'd actually been short of gold from about the middle of June. I thought we could see a move down to the 1240, 1250 level. I'm surprised at the overall move that we've seen in gold over the last three and a half months. I mean, it's been over $150 that gold's moved lower. Well, at the same time, we've had, this political upheaval and sort of really strong disagreements between some of the biggest economies in the world. Not only that, but you've got the U.S. and Iran really not getting along either. So there's some geopolitical issues there. I mean, gold had several rallies when we were worried about the actions of North Korea, and that has definitely simmered and gone away, knock on wood that it stays that way. But we're not seeing that same sort of bid that we saw coming to gold during that period when any of the geopolitical disruptions come this time. And today is actually going to be the lowest daily close in over a year in gold. So it really does continue to struggle. But today was also a day where we had the U.S. 10-year get back to 3%, the first time in a couple of months. So we are seeing the real interest rate still be a headwind for gold, and any day that we see some even moderate U.S. dollar strength, gold really seems to struggle. I mean, those to me are the two biggest headwinds facing gold on a structural basis. They're going to be real rates in the U.S. dollar, and it really seems to struggle in the face of those still. I'm starting to look, and I do have a small long position in gold down at this level. We have the managed money that's the most short of gold that they've been since we've tracked the managed money. The non-commercials, so all speculators, near the lowest levels that they've gotten to over the last couple of decades. Not absolutely, but near the lower levels. So the market really has shunned gold at this point, so it is a bit of a contrarian play. I am still looking for a stronger U.S. dollar, but I can see an environment of, say, stronger inflation, so real rates are going to go the other way that would be helpful for gold, in which gold could do better even with a stronger dollar. And that may be in a risk-off period where both of those assets could find flows moving into them. So I'm constructive on gold at this level. I would really not like to see gold take out the $1,200 mark in order to stay with my position. That just brings in a whole nother sort of technical break that wouldn't be healthy for the price action. But like I said, there's a few contrarian indicators out there that show that there's a possibility of gold being able to stabilize here. So we'll just have to wait and see on the price, because there's a few things that give us a good setup for it.
How are gold miners doing?
The gold miners, and that's another thing, they had done surprisingly well as gold started this latest $150 sell-off. But as of late, and it's been the sort of the last leg, but the smaller leg down, has been the one that's really impacted the gold miners more negatively. So that's not a good sign. A lot of the time the gold miners do tend to start picking up before the price of gold. Not always, but that can be viewed as a leading indicator. So that will be something to watch. I would love to see the gold miners sort of solidify or consolidate a little bit. Would be another confidence that we could be nearing a bottom. So another one to watch, but history always rhymes, as they say, maybe never repeats. So if we see gold hold on to this $1,200 level and start to do better, maybe the price of gold will lift the miners before the miners start to lift the price of gold.
I'm seeing a lot more chit-chat about Bitcoin and other cyber currencies again. Are we going to see another rise in them heading into December like we did a few years ago?
Yeah, we got a lot of sort of chatter come back into Bitcoin as it has had its run back above 8,000, and since then it's struggled a little bit again. There's been a few sort of market revelations, call it the failure of an ETF to get approval to go forward with. So I still can't say, what drives the day-to-day of Bitcoin, whether or not that takes any of the safe haven bid out of the gold market, whether that's a bigger play on, capital flows that are trying to leave one country and go to another, and when that need is more acute, the price of Bitcoin can rally. On a purely price basis, it seems to be struggling still. Ever since it's been a futures contract was when me and you first talked about it. It was basically launched at the CME when Bitcoin was 20,000. So it's obviously had a substantial reduction in price. There's several rallies along that way, but at roughly $7,500 here today, still largely on sale. A move back above the recent highs over the next couple of weeks, and I think maybe even more important to the overall market of Bitcoin would be a stronger rise up through 10,000. I think would have a lot of people's attention again, and that did seem to be a big part of the rise of Bitcoin in the first place, was that, almost that fear of missing out trade. I hate to say it, but that really was, the chatter and the momentum that was in the market that really drove us to those prices. So I think that would come back if you were back above 10,000 again. Whether we get there or not will be anybody's guess. I don't have any added insight on that one.
Do you have any opinion on the Russian massive sell-off of U.S. Treasuries?
No. I've read about it. You've seen people or heard about people that speculate why it's happening and why they're doing it, that sort of thing. I mean, the Russians now have finally started to pump more oil again after they've sort of escaped what would be a tighter control from the OPEC and non-OPEC meeting. So they definitely are getting more funding into the country through selling not only higher priced oil, but a lot more oil lately as well. So whether or not the Treasury selling was part of, an internal accounting process of, what do they need cash for, that sort of thing. I don't know if it's a way to sort of weaponize those holdings. I mean, I've heard of that when it's come to China as well, that they've, hold so many U.S. Treasuries that if they're going to be selling, who's going to buy them? And that alone could drive U.S. rates higher. Those weaponized sort of plays are not out of the question, definitely possible. But I would take it with a grain of salt until we really start to see a lot more of it come through.
Facebook and other so-called FANGs have taken huge hits on the stock market. Amazon seems to be the exception. Is Amazon more bulletproof, kind of put it, because they actually sell products instead of just ideas and advertising? Yeah,
I mean, and we saw that with Apple announcing earnings yesterday. Very strong day today. I think they finished the day up 5 or 6% on the day, and now the closest of the bunch to hitting $1 trillion market cap, which is just astonishing how big these companies have become. Facebook definitely seeing some of the sharper corrections, definitely some Facebook-centric issues that are facing that company. But Amazon has done an incredible job in diversifying their business structure. While still the AWS, the Amazon Web Service, is still a very strong part of that business, just like the iPhone sales are a very key part of what Apple's doing, and then the build out around that, of course. But these companies are incredible that they're getting to that size, and everybody points to the FANG stocks and says that this is why we have to be in a bubble, because look at where they are, and overlaid with charts of the .com bubble, whether that's a Cisco chart or just the general indice. It's hard to say, and I don't know that one is any more bulletproof than the other. I think they probably each have a weakness that will get a light shone on it at one point or another coming in the future. But the fact that they are all sort of in this race to be a $1 trillion market cap company is something to watch. And again, not a sort of momentum move that I think you really want to get in front of. I mean, the indice itself is one thing, but the individual stocks can always go a lot further than anybody thinks make any sense. So I think it's one that you just have to try and watch for now.
Do you feel if they hit $1 trillion in valuation, the U.S. government will look at breaking them up, like AT&T was broken up, I think, back in the 60s?
There is some of that, and of course there's the personal aspect of what Trump has put out against Amazon, whether that's the way they use the postal system or the way Bezos, who owns the Washington Post, uses that company as well. So I think it definitely puts a target on their back. Anytime you have a company that large and that integrated as these companies are into our daily life, the impact that they can have on each individual, that is what the antitrust rules are there for. So I think it definitely would bring about the questions whether or not it has to happen, or even if it would be a negative for shareholders would be another thing to be seen, I think.
Drew, thank you so much for chatting with us.
Thanks for having me on again, Jim.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His website's PIFinancial.com, and PolarFuturesGroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for our guests or for the show can be sent to info@HowStreet.com. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.